Hey there, savvy investors and finance enthusiasts. Have you ever stopped to wonder what the biggest financial threat seen facing your investment portfolio is in today's world? I'm not talking about market volatility or economic downturns. No, I'm talking about a silent, global catastrophe that is reshaping the very fabric of our financial systems. I'm talking about climate change, a subject so pressing that it's no longer just a topic for scientists and activists, but a matter of utmost importance for every investor out there. So if you want to protect your investments and be ahead of the curve, then you won't want to miss this video. Stick around as we dive deep into how climate change is becoming the single greatest disruptor in the financial world today.
Big shout out to Seeking Alpha for sponsoring our video and its analytics. Make sure to get your 14-day free trial of Seeking Alpha. Premium via the link in the description. You can only get the 14-day trial through the link below, so make sure to check them out, guys.
Climate change is swiftly becoming a major concern for the financial world. Banks and other financial institutions are gearing up to factor in climate risks. When they make investments, these risks are unique and haven't been considered much in the past, but that's changing. Industries like real estate, insurance, and mortgage lending are particularly vulnerable to climate risks. Some insurance companies have already stopped offering policies in certain areas due to these concerns. Climate change used to be viewed as a problem way down the road, but now it's coming much sooner. This means that long-term investments made today need to consider the impact of climate change, which is happening faster than expected. Let's dive into the magnitude of the climate change problem, setting aside political or scientific debates about its causes. There's a substantial body of evidence that's led scientists and world leaders to reach a global consensus that major climate changes are looming. Even in the most optimistic scenarios where humans try to intervene, the impact seems limited. Our awareness of global warming didn't kick in until the late 1900s, when concerns arose about the ozone layer and rising carbon dioxide levels. As scientists began gathering data, they started to see a warming trend. And when they developed models to predict how this warming would affect the planet, alarm bells rang loudly due to the scale of the issue and the time frames involved. The reality of getting a diverse world to agree and cooperate on reducing carbon emissions made it clear that the global response wouldn't be sufficient to prevent climate changes, let alone reverse them. This brings us to where we are today, witnessing the initial effects of planetary climate change that our world is ill-prepared to handle. Occasional extreme weather events can be catastrophic, but climate change is unprecedented. Destructive events like droughts, floods, wildfires, and storms will become more frequent and occur in entirely new regions. What's more, even a few degrees of warming can permanently disrupt the planet's weather patterns. The planet is already warmer than it's been in human history. To put it in perspective, previous climate shifts contributed to the 5 mass extinctions known to science. Climate change is a global, highly intricate, probabilistic challenge with far-reaching consequences, but the turmoil of past world wars will seem minor compared to what's ahead. It won't be a single catastrophic event, but a series of events spanning decades, resulting in lasting alterations to habitats, food sources, and water supplies for all life on Earth. Historically, during climate changes, surviving species migrated toward warmer regions as the planet cooled and toward colder regions as it warmed. Even if climate change creates new habitable areas, the prospect of millions of people migrating will cause unprecedented political, economic, and social upheavals. Behind the scenes, scientists, governments, and scholars have been hard at work collecting data and estimating the timing and scale of impending climate changes. While this effort has produced valuable information, it's been hindered by the complexity of creating planet-wide climate models, the challenges of global cooperation, and the sheer volume of data involved. Some predictive models, for instance, consist of 125,000 lines of computer code and take nearly a month to complete a single run. Often, these models focus on specific aspects of global climate due to the monumental task at hand. The way the public is reacting to climate change is just starting to sink in. First, some folks are resistant to acknowledging the issue, making it harder to mobilize change. Then there's the challenge of cognitive illusions that can cloud our perception. Another misconception revolves around what climate change actually means. When scientists talk about global warming, they're forecasting a mere few degrees of temperature rise across the planet. To many, going from an average daily temperature of, say, 70 to 73 or 74 degrees doesn't ring alarm bells. It might even seem pleasant, but here's the catch. Global warming isn't that straightforward. With just a 2 degrees Celsius temperature increase, we're looking at polar ice sheets vanishing, sea levels rising significantly, and a total upheaval of our planet's ecosystem. At 6-7 degrees, things turn catastrophic. To put it in perspective, during the last ice age, the average temperature was only 6 degrees Celsius cooler than it is now. Moreover, these risks are fundamentally different from the conventional financial risks we're familiar with, such as market share losses. Nevertheless, finance and investing revolve around forward-looking perspectives that consider risks, rewards, and probabilities. The time frame for investments spans from months to decades. So, even a hint of change within that time frame filters into financial models and expectations. For instance, reinsurance companies have already increased rates to account for potential losses caused by climate change. Many climate models predict severe impacts as early as 2050, within the lifespan of mortgages and insurance policies. The insurance industry, for instance, is already turning down coverage for properties in regions facing heightened climate risks. What's unsettling is that you might experience the financial consequences of climate change on your investment assets long before you notice its physical effects. The real estate market is already a prime example. If banks stop offering 30-year mortgages and insurers refuse coverage for your beachfront property, its value can plummet. Furthermore, regulatory authorities are starting to get concerned. Stress test models used to gauge a financial institution's ability to survive don't yet consider the risks of climate change. Entirely new models are required. Predicting how markets will react to climate change is tricky due to the unprecedented nature of the issue. Acute events, like individual storms, will have immediate impacts on specific companies and assets, but chronic changes like rising sea levels may take decades to fully manifest. The financial world might see more frequent and deeper responses to such events, affecting various industries differently. The potential for profit from ecologically promising ventures is there, as is the chance to support ecologically beneficial projects. What remains elusive to many investors are the accompanying risks. Which companies will suffer or vanish? What regions will be destroyed by natural disasters? What businesses won't secure workers or raw materials due to climate issues? Climate change isn't a concern we can postpone until mid-century. It's already underway. It's time to consider the financial implications of living in a world where climate risks shape our investments, our homes, and our futures. Uncertainty is the breeding ground for market volatility. Volatility, a key metric in stock investing, quantifies the fluctuations in a stock's daily prices over time. It's not a constant. It changes as investors continuously reevaluate economic conditions and a company's financial outlook. Volatility is synonymous with risk and surges when uncertainty looms. So it's evident when stock prices swing wildly during earnings announcements or when uncertainty surrounds factors like interest rates or economic recessions. Regardless of the specific scenarios, climate change is poised to overshadow every other financial challenge or opportunity we've encountered. When we say we're not just talking about current investors. We mean all of humanity. Thanks for tuning in. I hope you found it informative and valuable in your investment journey. If you enjoyed this video, please consider subscribing to our channel to stay up to date on the latest insights and analysis on the stock market. Also, don't forget to hit the like button and share this video with your friends and family. Remember, investing in the stock market can be complex and risky, but with the right information and tools, you can make informed decisions that could lead to substantial returns. See you on our next one.